Alright, gonna kickstart this tutorial off with GBPJPY. Reason why I'm choosing this one, I want to show you guys why your state of mind and your risk management has to be on point at every single stage of your trading. Now, take a look at this. This is where market price, gapped up. Just from a reference standing point, market price gapped up. So we had a gap right here, so correct? Now, we already understand that market price eventually gonna fill the gap. So I'm not gonna waste time on that part. So price kept on going. We reached what many people would call a, quote unquote targeted high. After that targeted high was met, sellers entered the market. So stop losses are sellers present. Now, for those who would have been trapped inside of this accumulation phase and kept on buying, you're buying at the top of an impulse move because right in here, so this is the supply zone. This is a supply zone. So most of the earlier buyers, they are cashing out. So you buying in this area, you're buying in an era of exhaustion. Price break, and as I told you, market price, the gap had to be filled. So gap filled. Now, this is where things get interesting because if I was a buyer on this move and I would have every single reason to buy here, right here, so I am in between two algorithms right now. I'm in the algorithms of the sellers and that of the buyers. And the market maker is going to come and he's going to take out those whose stop losses are not safe, right? Or those who are not applying risk management because persons are just entering erratically at this point. So for those who sold into this strong move, the strong impulsive move right now, market maker quite naturally came, took them back. So we have entered right back into the accumulation phase. Now this is where I took an entry because naturally market price is showing me that there's a continuation of the move because we're looking for a breakage of the supply zone roof. Now, what happens when there is a attempt to re-break an area that price couldn't break earlier and you get what we call a price retest, but it turns out into a rejection, bullish rejection. Right. This would have been the second attempt, or the second main attempt to take out this zone. So price then went, came back down, and right here so was where things get very interesting. Let me show you something quickly. Even though the market price came back down, we didn't see it break some key previous levels. The thing is, many persons sold here, and I can't get upset with them or said to them that they were wrong. Many persons saw this as what they call double rejection, and they sold. No, it did in fact take off for quite some time. Mind you, it did in fact go into the, bearish direction. Selling did in fact take place. But I want to stress that if you were monitoring how market price expansion works, you would understand that certain key levels had to be broken, right? So if this was where market price corrected, work with me. I'm going to take this out of the way for now, okay? I don't serve it purpose. You see this, always take a look at your previous impulse areas. This is where market price, quote unquote, made that attempt. And this is where market price did its correction, right? So all of this move is a correction attempt. Bullish rejection. Now, did market price take out this area? You can pause the video at this time, replay back this segment, and you'll see what I'm saying. You're still inside the range. Market price didn't break out of the range. All of this area, these are the two parameters that have been set. Market price did not break out of the range. So you're still inside of this entire area. Now, this is the pullback and the expansion. But mind you, sellers have entered right here. So buyers have entered as well. Now we have two entry points are buyers Well, actually three, because some persons would have entered here. So right now, the stop losses of those who sold here on the earlier rejection gone. So price has now made the new high. And not surprisingly, a lot of persons, went and chased it. So looking back, you can see that each attempted push by the bulls to send the price higher, there was more injection of what? Bearish power, because sellers were selling inside of the bullish push while the bullish push was going upwards. So the higher the price went, or many people would say the more the price went into deeper supply, the more sellers were enticed. Now, market maker can drop it slow or drop it hard. It can rise the price slow or it can rise the price hard. This is why risk management at every single vantage point of your trading is essential. So inside of this range, we have stop losses everywhere. So what did the market maker do? Come crash the price back down. Every single person that bought on this impulsive move, everything got wiped out. Every single person. You see why this is a psychological game? Your mindset has to be on point when you're trading Forex or else moves like this is gonna confuse you and have you saying, what on earth is going on? Let me briefly move this line out the way. That should have been a short line. Alright, now price made the low. Now this is where frustration would kick in. Certain days you're just gonna have to look at the chart and say to yourself, alright, this is not my day to enter. Market is clearly doing a lot. Let me just stay away. Most persons upon seeing this would have naturally bought at the bottom because that's what I've been taught as well. And you'd say, okay, wait for the justification and you would double up on your entries. That is true if right here, so the market price had given you what we call a breaker structure. You did not get a breaker structure. That is why annotating a chart properly and looking for confirmations in your overall trading is key. Take a look at how many times buyers would have entered the market only to have their stop losses run. 1, 2, 3. Now price came up, but the key rule of thumb in this is that once market price entered this area, it should have stayed above it to constitute that the asset price is in fact making a true correction, a true continuation in market movement, so to speak. You did not see that happen, so rejection right there, so right? Bullish rejection. So what happened? Market maker has sent the price back down even, well, not really further because this wasn't taken out. But this entire era was one big massive stop hunt. Now look what happened. Attempt number, what, 5? Price still not staying above. It just now get the momentum that it needs. So more and more persons are seeing their bull entries, their buys being wiped out. And this took place for the first 2 weeks in the month of May. And honestly speaking, many persons will be like, I'm not going to be trading this asset. But it's not really the asset. It can happen on any single Forex pair. Every single asset has moments like this. That's why I said this tutorial, it's really a psychological tutorial for you guys to look back and to understand that certain moments in the market, you can do your technical analysis, you can mark out everything on the chart, you can, bombard your brain with a lot of courses. There's gonna be moments where the market is gonna do what it needs to do. Now, there were several gaps, well, not really several, but few gaps, target areas that the market price had to fill out. And he had to fill these areas, then eventually move down with the price. And guess what happened now? We have still not seen market price stayed above the key zone area. So right here, so can be another potential round of selling. Should market price fix this up look a bit for you guys right around here. Should market price take out this zone? Okay, show you guys what's happening. I'm just gonna do a quick look at channel. Should market price take out this zone? We should see more further south. And that's just the simplicity of the matter. All right. People, Forex trading is a 95% psychology, 5% technical. You have to know where the current players in the market are, and you have to understand what the market price is doing by virtue of where the stop losses are. Those who enter a buy here, they're in the safe zone. But if you're looking to enter a buy in this region after the impulse move has taken off, you're going to put yourself in direct firing line for the market maker to target your stop loss. Hope you guys enjoyed this video. Stay tuned for the upcoming ones. Peace.